Good afternoon, everyone. Welcome to this webinar, yet again arranged by TIOB in partnership with Pragmatic Skills Academy. This Thursday, 22nd July, we've prepared a topic on rethinking sustainable finance in the oil and gas industry in partnership with Pragmatic Skills Academy and TIOB. The facilitator for this upcoming course that has been prepared for our bankers in Tanzania will be Dr. Watson Munyanyi. As you can appreciate, Tanzania is at the beginning or at the precipice of some significant investments in the oil and gas sector. What with the recent announcement of the East African crude oil pipeline project that traverses across the East African region in multiple states. But at the same time, in the last 7 to 10 years, we've seen gas prospecting in various regions, namely Lindi, and other regions where some exploration has happened, and in some cases, some deposits have been discovered near the shores. And in some cases, we've seen some negotiations ongoing with the government where certain projects in gas extraction are forthcoming. Despite the delays, we know that the best consensus is to be reached, where a negotiation of a contract that will benefit the local economy very well in developing sustainable value chains and also sustainable development in the local communities in Tanzania. This being both for oil and gas, financiers, or rather financial institutions and banks have a significant role to play in developing the value chain that comes with the extraction of these carbon deposits. Oil being a significant boost to the economy, where economic development has been seen to accelerate in countries like Nigeria, Angola, with gas deposits, and other regions where we've seen economies skyrocket in a short period of time once oil has been found. And also gas deposits. So what are banks' roles in this? What is the role of a bank or a lender in this particular industry? And how best can it navigate this industry in order to provide sustainable lending and also use financial models that are profit oriented and minimize the risk that is inherent in lending to operators within the oil and gas industry. For this, our facilitator, Dr. Watson, has prepared lessons from various different economies that he can present and provide some indication of an introduction of financial models that can be adopted in order to navigate safely the risk inherent in sustainably financing the oil and gas industry. In Tanzania, he is very much aware that we have some projects that are in the pipeline. He is also aware that there are some African economies that have advanced significantly in this sphere, with some economies like Nigeria having an oil industry that is very well got a number of years under its belt, with a number of operators and banks lending to the same. We are hoping that TIOB, having taken this first step in putting together programs that can start to introduce knowledge and experience in this market regarding on how to finance properly and to arrange financing of oil and gas projects in the industry, might bring some benefits to our bankers, to our financial institutions who are perhaps looking at this sector as it's forthcoming and trying to make preparations for the products and services that they might be able to offer to this industry once some meaningful steps have been taken by the government. We hope that this will be of interest to you. We hope that even if you're considering and may not have made the decision already, this is worth investing your time in terms of building up the knowledge and the exposure to the different markets that can be presented under this course. With that, I'd like to acknowledge also Pragmatic Skills Academy in arranging this program and actually sourcing the facilitator, Dr. Watson Munyanyi, and making this program available to you. The webinar today is an introductory one. It will cover at a high level the various topics that will definitely go in depth once you sign on to the course. So we hope that this is an opportunity for you to solidify and commit to attending this course. With that being said, I would like to invite Dr. Watson to take us through the webinar and through the presentation that is prepared for us. Dr. Watson, the audience is yours. Thank
you. The future of Africa might as well be found within the oil and gas industry. But there is a challenge. Banks are reluctant. Banks develop cold feet primarily because there is a general lack of commitment, a general lack of understanding as to how banks can remodel existing financial solutions to meet the dynamics that you find within the oil and gas industry. You will find that whenever we discuss financial engineering, whenever we discuss financial modeling, the underlying principle is about understanding the dynamics that you find within a certain sector. Once you understand the dynamics within that sector, you are able to tailor-make the products that we have within the financial sector to suit those that exist within that particular sector that we want to finance. We've seen a significant growth in discoveries across Africa in terms of oil and gas. But generally speaking, we cannot continue to ignore the fact that the future of Africa lies in the oil and gas industry. And the eyes of the industry are focused on Africa because this is where the greatest potential lies in terms of the industry. I mean, Africa is home to 5 of the top 30 oil-producing countries. So we cannot afford to ignore the sector as it is manifesting itself currently. And you'll notice that by the end of 2020, it was estimated that 624 trillion cubic feet of proven gases reserves were within Africa, and that accounts for 7.5 of the global reserves. Not to talk of oil, 125.8 billion barrels proven reserves within Africa. And in most of the circumstances, oil, gas, and minerals combined, they account for almost 75% of the continent's exports. So the thrust here is we need to relook into the oil and gas sector from the perspective of bankers and try and understand how we can reorient the sector, how we can reconfigure the current products to suit the emerging trends within the oil and gas industry. And that is where the future lies in terms of growth in the African continent. Today, the oil production amounts to about 8.4 million barrels a day of oil. So that's a very high level of activity that you find within that industry. And this is where we are coming in to say, if we have all this hive of activity within the oil and gas industry, how can financial institutions come in to reorient themselves to suit the emerging trends in the market? And Africa is basically now considered as an emerging energy exporting country. And in those countries that historically were involved in the production of oil and gas, it accounts for a significant component of their reserves. In oil-producing countries, over 90% of their revenues has got a direct link with oil and gas production. So it's something that we should not hold on the corner because it is a significant component of what Africa has to offer. Although we seem to have disruptions happening within that sector and all other sectors as a result of COVID-19, we have seen unprecedented changes happening within the oil and gas industry as a result of COVID-19, restrictions on movement, restrictions on international travels, airlines having restricted or low demand. We have seen countries being affected in terms of the level of productivity. And even those that are consuming cannot take advantage of the prices that are low currently because of COVID-19, because there is limited demand and there are no opportunities for storing that for future use. But the good news still remains. The good news still remains that on a best case scenario, oil demand is going to rise. By 2026, predictions are that 105 million barrels a day will be demanded, which is a 4% increase from 2019 levels. So the COVID-19 crisis might have caused a historic decline in demand, but not necessarily a lasting one. Because there is a general tendency to adopt a long-term perspective on a short-term problem. And we are just trying to enlighten the banking industry to say, yes, there is a need to manage risk in terms of the implications of COVID-19, but projections show that once we are done with the effects of COVID-19, there is a substantial increase in demand that is likely to be experienced. So although COVID-19 has affected demand, although it has affected prices, there is still room for significant improvement in terms of demand for oil and gas reserves. Others have also spoken about the impact of green sources of energy on oil and gas reserves. But let us not forget the fact that oil and gas have survived the test of time. The greener sources of energy, yes, they come in, but they have got certain limitation in terms of their capacity to provide the required demand. Under those circumstances, we still find a significant room for excessive demand for oil and gas products within the African continent, irrespective of the fact that there is a general drive to go green in terms of energy sources. Yes, we accept the significance of going green in terms of energy sources, but that does not discount the fact that demand for oil and gas will continue to increase amid introduction of greener sources of energy. So COVID-19, yes, greener sources, yes, but the level of demand is going to increase. And this is a lucrative market that financial institutions have to take their eyes onto if they are to improve on their profitability and their sustainability. Having said that, we then realize that over the years, like what Chris mentions, over the years, the oil and gas industry has stood the test of time. It has weathered many downturns and also capitalized on many upswings. And the focus primarily remains that the industry has to work on new ways of working, new ways of reducing costs, new ways of operating, new ways of utilizing new technologies, so that at the end of the day, the industry remains competitive. And that is not a prerogative of the oil and gas industry on its own. The financial sector also comes in to augment the efforts that the industry are making in terms of cost cutting, the efforts that the industry is making in terms of adoption of new technologies, the efforts that they are making in terms of adopting new working methodologies. We as the financial sector, we are coming in to say, we need to work with the oil and gas industry and come up with solutions that will ensure that there is long-term sustainability of the oil and gas industry, because it still remains a very critical component of the African economy and the continent at large. That is possible. Africa can capitalize on oil and gas to spearhead its growth. After all, in terms of consumption, the third fastest growing demand for electricity is within Africa. And that consumption has grown exponentially over the past 2 decades. 2005 and 2015, with just a 4.8% growth in consumption of oil and gas. We expect that kind of growth to even improve once we are over the negative effects of COVID-19. Even when you talk of population-wise, there is sufficient population to support demand on supply of oil and gas. Talk of the potential for innovation within Africa. It has got a huge potential for innovation because there is a lot that still remains untapped within the African continent that we can capitalize and also work towards improving the level of demand for oil and gas within Africa. So the picture is bright in terms of utilizing the possibilities that lie within the sector to ensure growth within that kind of that sector. Africa is set to be a hive of activity over the coming decades. New companies, global companies, are looking towards Africa to pick on projects that they can invest in that will power Africa to reach its potential. I'm not talking only about projects that lie within the industry itself, but I'm looking at supporting industries as well, industries that are there to support the oil and gas industry. We are seeing a significant increase in the number of global potential investors that are eyeing Africa to take advantage of the methodologies, to take advantages of the resources that are available within the African continent. I'm not discounting the fact that we have new discoveries of oil and gas reserves that continue to emerge day in, day after, and they present unique opportunities for economic growth and development. You talk of a number of discoveries that have come up in Mozambique. They are discoveries for natural gas, and those discoveries, according to projections, they are saying they are going to power Mozambique to become one of the major producers of liquefied natural gas right across the area of Mozambique. We are not talking about, we are not forgetting what is happening in Tanzania. There are significant discoveries that are happening in Tanzania in terms of natural gas. The prospects of the East Africa crude oil pipeline, that is going to be a vehicle for oil exports within the East African region. We are talking about reserves that have been discovered within the South African peninsula of Karoo. All these discoveries are positioning Africa and African countries to be significant producers of oil and gas. And when we talk of oil and gas, I want to appeal to those participants who are coming from countries where there is no direct production of oil and gas, where discoveries have not been significant in the oil and gas industry. We must understand it from the upstream, middle stream, and downstream kind of production system that we find in the oil and gas industry. So yes, we may not have direct production of oil and gas within our economies, but when we look at the effects of production in the African continent and how consumption has to be met within our own context, we can find areas where we fit in as financial institutions to support either the upstream, downstream, or the middle stream activities that we find in the oil and gas industry. So it is up to us to make a significant effort to understand the dynamics of the oil and gas industry so that we can fit in within the development that are happening in the context and be able to understand how we can tailor-make our existing financial products to suit the demands of the market. We have got logistical procedures that are involved. We have got procurement. We have got a number of other upstream activities and downstream activities that us as financial institutions can find ourselves being involved in the financing. So the discoveries are painting a very good picture in terms of how that can actually affect the production system and the demand for electricity. Because as financial institutions, we also play a role in inducing demand for oil and gas. For example, when we advance loans to consumers and they have more consumption, the purchasing power increases. They shift that purchasing power to the oil and gas industry through consumption. And this is where we need to find ourselves coming in to say, how are things developing and evolving over the African continent? And maybe if we are to single out maybe the case of Tanzania, when you look at the case of Tanzania, you are tempted to believe that within the oil and gas industry, Tanzania is one of the highest contenders in that field. The discoveries that are happening, the legislation the legislative reforms that are happening in Tanzania, the infrastructural developments that are happening in Tanzania, the opposition in Tanzania as a new contender in terms of this oil and gas industry. I mean, by all metrics, Tanzania is one of the fastest growing economies among East African oil producers in the region. And it has got significant share in terms of the production of natural gas resources. Although production is still relatively low, but with the discoveries that are happening, we are realizing that oil and gas presents an opportunity for the transformation of the Tanzanian economy. And its close proximity to the sea, its proximity to the Eastern Asian markets puts it at an edge over its peers within the region. If you try to compare it with other landlocked potential oil and gas producers within that region, you find that its proximity makes it easier for them to be able to compete competitively, to participate competitively within the oil and gas industry. In that context, we are saying financial institutions within the Tanzanian economy, financial institutions within the Kenyan economy, within the Ugandan economy, within the Mozambican economy, within the Angolan economy, within the South African economy, and within the African continent need to gear up for these opportunities that are about to explode, such that when we drive towards full potential, we would have reaped the full benefits of the transactions that are involved within that industry. So I just put on Tanzania just as a case study or as an example of the fact that there is more for financial institutions to benefit because these institutions are slowly programming themselves as contenders within the oil and gas industry. And the same can be said for Mozambique, the same can be said for Angola and all these emerging oil producers. However, despite the significant potential that we realize in the production of oil and gas industry, the industry continues to suffer because of the significant capital requirements that are involved in the oil and gas industry. Number one. Number two, the approach by financial institutions towards financing oil and gas has generally remained that of risk aversion. Now, as a result of that, oil producers, gas producers within Africa are struggling to raise the capital required to finance new projects. This is where we are, ladies and gentlemen. We are not disputing the fact that there is potential within the production of ONG projects in Africa. But as it is now, the challenge remains that the traditional sources of financing are failing to meet the expectation or the condition that exists within many oil and gas contexts within the African continent. And this is where we find ourselves. Oil and gas companies are struggling to get the required liquidity that is necessary to operate, the required capital, required cash resources to allow them to be able to operate. This is primarily because the traditional sources of financing that are available to the industry are not meeting the current dynamics that exist within the industry. We were talking the other day about the concept of bringing in artificial intelligence into the banking sector. And we'll say one of the challenges that small players are finding in terms of accessing financing within the banking sector is because the requirements that we find within the banking sector do not meet the dynamics within their context. For example, we have got small and medium enterprises who are working on a more like self-employed basis. They do not have a formal pay slip as you would find in a formalized institution. So when they go to a bank and the bank requires them to produce a financial statement, requires them to produce a pay slip, they find themselves unable to meet the expectations of the banking institution. And not because they are not financially sound, but because the dynamics that the banks hold on to do not match the dynamics that are happening within the context. And we are seeing this manifesting itself in the oil and gas industry, where we are saying reserve-based loans are no longer appealing in terms of the nature of ownership structures that we find within the oil and gas industry. Other debt securities may not be appealing to the producers because of the ownership dynamics that we find in the oil and gas industry. More so your usual preferred and common equity investments. You find that there is an emerging set of investors who find common and preferred stock highly unappealing because of the implications, but they would want a methodology of financing that suits certain expectations in terms of their consumption pattern and in terms of their role, the role that they are expected to play in the day-to-day operations of the project. So these traditional sources of financing are gradually becoming irrelevant given the dynamics that are happening in the oil and gas industry. And we are seeing now an emerging school of thought that brings in new methodologies of financing oil and gas industry. There is an increased talk about asset-based securitization as a form of financing, where you are packaging any cash-generating assets that the project might have, and then issue bonds that are paid, collateralized by these assets. And this becomes a lucrative kind of an arrangement because it specifically looks at any form of asset that can be obtained within the project, from current assets to your fixed asset, your royalties, your other interests that you would find within that operation, they form part of that kind of a transaction. So they are re-engineering current methodologies of financing to meet the dynamics that are happening in the oil and gas industry through asset-backed securitization. And that also comes in the form of what are known as streaming and net smelter tanks. Part of the production from a project is used to compute what can be paid upfront as a loan. Of course, taking into account your net present value, the discounted cash flows, and the resulting net present value of that kind of a return. If this is what we're expecting to produce in future, a percentage of that can actually be computed and be advanced as a loan to the project. And that becomes a significant source of financing for the oil and gas industry because of the dynamics that we find ourselves in. Also, we are seeing net profit interest becoming a lucrative kind of financing arrangement that you would find in the oil and gas industry. And the advantage is that you are lessening the burden of collateralization, physical collateralization on the part of the producer, and craft structured deals that will enhance investment within that oil and gas product. We are also seeing a tailor-making of our traditional joint ventures, where we are trying to find ways of ensuring that there is significant collaboration between the financial institution or between the investors and the project that we want to finance again. And that collaboration on its own will help in enhancing accessibility of either short-term financing or long-term financing within the oil and gas industry. And those factors are slowly bringing in a component of sustainability in terms of financing, the oil and gas industry. But there is also a but. There is also a part that needs a multifaceted approach in terms of ensuring sanity within the oil and gas financing industry. For us to ensure sustainability in the products that we develop for financing the oil and gas sector, we also need a multi-sectoral paradigm, a multifaceted approach where the public, the private, domestic and international players converge to protect the interests of financiers, the interests of recipients of financing, to ensure long-term sustainability of the alternative sources of financing that we would have come up with. For instance, we cannot talk of sustainable financing within the oil and gas sector if we are still battling with money laundering within our context. As long as Africa is battling with money laundering and has not been able to come up with effective money laundering mechanisms, whatever financing methodologies that we come up with will not be sustainable, because they will suffer from money laundering activities. They will be bled through money laundering activities. They will be suffocated through money laundering activities. We also need to go a step ahead in terms of combating the financing of terrorism. If we are to ensure that there is sustainability in terms of the oil and gas financing alternatives that we find ourselves battling with. Also, within that same context, we also must appreciate the fact that sustainability in terms of oil and gas financing can only be achieved if the governments, both foreign and local governments, put a stamp on illicit flows, illicit financial flows from or into Africa. As long as there is a significant component of illicit financial flows from Africa, financing oil and gas products will never be sustainable. It will always suffocate from the negative effects of illicit financial flows, which is an area on its own that Africa has to battle with or has to live with. As long as there is a negative side of illicit financial flows that is credited to Africa, financing oil and gas can never be sustainable. So it is not only about tailor-making products to suit the African continent or the African continent, but it is also about making sure that we plug in those negative activities that are likely to suffocate the attainment of significant efforts to finance the oil and gas industry. Having said that, we also must come together as Africans, African countries, be it sub-Saharan African countries, to come up with mechanisms that can be used to tap into the global liquidity changes. Whenever there is an increase in global liquidity, how are we tapping into that as the African continent? How are we ensuring that we tap into that context as we progress? How do we tap into the desire by investors to diversify? Whenever there is an increase in the need for diversification by investors outside the African continent, have we positioned ourselves to be able to tap into those changes in demands or changes in the desire for diversification? We also need to develop our own markets, our own capital market, our own sovereign bond markets should be strengthened enough so that they give our treasury, they give our central banks the technical capacity to issue international debt securities. Once we have developed debt capital markets, we are able to empower ourselves to penetrate other markets. I'm talking about the policies that we come up with, the consistency that we have in the policy, that provides an opportunity for the development of technical markets and technical activities that align to the development of bond markets. So us as financial institutions, we have got the responsibility, we have the honor to be able to undertake comprehensive review and analysis of the dynamics of the oil and gas situation in Africa. I'm glad we are seeing a significant number of players from the banking sector joining webinars like this. It is a manifestation of the desire from financial institutions to understand the dynamics that are happening in the oil and gas industry. We also need to have a concerted effort to be able to analyze the performance of the oil and gas sector in our economies and be able to highlight the specific constraints that we find in the utilization of financial resources. That, coupled with an understanding of how players, strategic partners like the African Development Bank, strategic partners like the African Union, strategic partners like the regional blocks, we have your COMESA, ECOWAS, and other regional blocks, how they come in to bring in the energy in the energy sector. Because what we have an organized, once we have a substantially organized system of strategic partners, it is possible for us to bring in the energy into the sector that is necessary to ensure that we drive the oil and gas industry into a sustainable market. Having said that, one of the critical elements that we need to focus on is the ability to conduct oil and gas financial modeling. Banking institutions, financial institutions, non-financial institutions, you have to make a deliberate effort to understand how to prepare accurate analysis of the commercial outputs that we find from the oil and gas industry. That will allow us to be able to come up with proper valuation, proper risk management strategies that are necessary for the development of flexible financing structures for oil and gas projects. Once we have that, we are able to understand how best we can intervene to ensure that there is sustainability in terms of oil and gas financing. So I'm calling on non-bankers, non-bankers, and other interested parties to strategically invest in the ability to model the activities that are happening in the oil and gas industry. That kind of a financial model will act as a tool that enables businesses to understand the risks, businesses to understand the benefits, businesses to understand how best they can deal with the management of the cost profiles within their industry. So it creates a representation of the financial situation in the oil and gas industry. And that is very important if we are to achieve sustainable financing in the oil and gas industry. Here is a framework of how modeling could actually be the solution to our problem, the problem of matching the demands for financing and the supply for financing. Financial modeling, number one, it will allow you to be able to undertake, it will equip you with skills that are necessary to conduct sophisticated analysis of the oil and gas industry. Remember, like I was mentioned to say, oil and gas industry is understood from the upstream, middle stream, and lower stream activities. You need to have the skill to conduct an analysis of all those activities. And that is part of oil and gas financial modeling. You will have the skills to construct comprehensive modules for the pricing of oil and gas products through financial modeling. So the process of developing the model itself, be it players in the oil and gas industry or it's the financial institution, it will equip you with the technicalities as to how you create proper modules that allow you to price the oil and gas production in its rightful manner. And also, it will allow you to be able to make some kind of ordinal evaluation of how the cash flows come to life within the oil and gas industry. It will, in simple terms, it will allow you to be able to distinguish which cash flows are primary and which cash flows are secondary within the oil and gas industry. I cannot discuss financial modeling without mentioning the significance of sensitivity and scenario analysis. Financial modeling is about creating sensitivity and scenario analysis. How do we progress given the situation A occurring? How do we progress given situation B occurring? And what are the implications of those scenarios happening? All that is contained within the oil and gas financial modeling framework. And this is what is required if our banking institutions are going to succeed in the financial range, in the innovation of products that are existing within their banks to suit the needs of the oil and gas industry as we understand it today. On that note, I am inviting all of us to a module that will be running, a 5-day interactive training course that is run by the Tanzanian Institute of Bankers together with Pragmatic Skills. I will be facilitating that module. It's on oil and gas financial modeling. What are the key issues that we'll be discussing? We will introduce the concept of financial modeling. We will also introduce financial modeling in the calculation of the cost of equity. We talk of your just general modules that you'll find, like your capital asset pricing model in relation to your KE, the cost of equity, and also the other methodologies that you find, the dividend growth models and all other stuff. We also bring that in. We also bring that in the discussion on financial modeling in the oil and gas industry. Analysis of equity returns in the oil and gas industry. That will also be covered in the module. Then we'll also talk about ratio analysis as it is applied in the oil and gas industry. So we'll talk about ratio analysis for upstream activities, ratio analysis for midstream activities, ratio analysis for lower stream activities, and all that customized specifically for the oil and gas industry. So that if you are a loan officer and if an oil and gas company brings their plan projections to apply for a loan, when you look at it, you are able to say, this does not conform to the general standards that you find in the oil and gas industry, because you will have an understanding of the mechanics of the oil and gas. We'll also talk about the net present value, project appraisal, your capital budgeting in the context of oil and gas industry. All that will be done with practicals that relate to the development of such a model. And more so, the module will allow you to bridge theory with practice. Yes, we have done financial modeling at school, at university, but the practical component is what we are bringing in. We will use real life examples from the oil and gas industry to undertake these modeling stuff. To augment financial modeling, as we conclude, it is also important that we adopt an analytics-driven operational excellence. Data is at the heart of all operations. And us as financial, the next level is to build operational efficiency through data analytics. We must augment that. Data analytics will allow us to be able to undertake even risk management. And that is what we need. That's what we need to tell ourselves. That is what we need to empower ourselves as we produce. So banks should be able to perform robust collateral analytic and optimization strategies to support applications by players within the oil and gas industry. And that will also push the capacity of innovators to be able to innovate around data-driven decisions. But the bottom line is Africa is positioned to do more. Africa is on its way up. The good news is we are beginning to speak with one voice. We are clearly realizing, getting to the point where we realize the importance of improving our own domestic resource mobilization. We are slowly understanding the need to maximize on financial innovation, to monitor and manage our remittances and other financing mechanisms. We are slowly understanding the need to implement certain commitments and promote certain level of quality and predictability within the financing system. Policy consistency and other variations are coming in to support the whole idea of ensuring sustainability within the financial sector. So financial modeling is the tool that will take us to sustainability within the oil and gas sector. Having said that, ladies and gentlemen, thank you very much for your time. This is what I wanted to share with us briefly as we poke into the idea of oil and gas sustainability in terms of financing. It's over to you, the event director. Thank you very much. Enjoy it.
Thank you very much, Dr. Watson. I really do appreciate the facilitated presentation. Participants, would like to thank you so much for paying attention and listening to the presentation. We do hope that you found this content relevant. I see that Jason from Pragmatic Skills Academy has run a poll. I would like to give him some room to say a little bit about the presentation today, and a little bit about the upcoming program and other programs that we've arranged in partnership with the Pragmatic Skills Academy. Jason, do you want to say a few words? And perhaps if you're able to tell us what the poll says, it'd be awesome.
Hi, yes, of course. Good afternoon, everyone. Thank you so much for your participation and your attendance. Thank you, Dr. Watson. Thanks, Patrick. Yes, I'm happy with the participation and attendance. Thank you very much to everyone that has attended. The obviously the partnership with Pragmatic Skills Academy and TIOB, we are really planning to run some great programs in the coming months. For the banking sector, financial services sector. So we're looking at various programs. Oil and gas financial modeling is one of them. Oil and gas risk management. We have a number, but we've listed all of those courses on the TIOB website. These are all facilitated through the Zoom platform by different facilitators, global experienced facilitators. So you'll get really great insight from best practices around the world. The poll is, we've had some decent, 52% of the participants entered into the poll now. It's been pretty positive. We've got 13 people. They all obviously found the content very relevant. Everyone learned something new today, and that is always good. That's the objective. And 13 of you said you would like to know more about this topic. So obviously the oil and gas finance topic. So we are running two courses specifically for the oil and gas sector. Talking about the oil and gas sector. So the one is the oil and gas financial modeling, as Dr. Munyanyi spoke about. And then we'll be running a course on risk management for oil and gas. And that's also facilitated by a Paul Chupasu. So those courses. If you want to attend these courses, you need to go onto the TIOB website. You can download the brochure, the course outline, and then there's a link where you can actually go and register for the event. And then we'll secure your seat then for the event. So we look forward to you guys participating. We're going to open up the floor now for a Q&A session. If you have any questions, any concerns that you'd like Dr. Watson Munyanyi to address, perhaps, or perhaps anything about the courses that we are running, please feel free to raise your hand and ask those questions. We'll be here until we've answered all those questions. Thanks.
Thank you very much, Jason. Are there any questions at this moment regarding the presentation? Or perhaps, regarding what Jason said about getting more information from the TIOB website? Any comments regarding the session? I see a hand raised there. Christian Mtui. You're welcome.
Yeah, thank you very much. This is Christian. I'm at NMB Bank PLC. So yeah, we would like to appreciate the presentation. My question, first of all, will we be able to get this presentation, which it was presented to us? Second, something maybe which did not come very clear to me, maybe it was said and maybe I was not paying attention. I hear that with the oil and gas financing, we do not do the traditional financing. So there must be some other methods, other ways to do this oil and gas financing, but that did not come very clear. What are other, or maybe it will be covered in other topics or something, but not come very clear to me. What are the alternatives way of financing oil and gas apart from the normal traditional ways where we are used to? Thank you.
Okay. Right. Thank you very much for that contribution. I did mention a bit on the new methodologies, but the reason why I did not want to dwell much in the new methodologies of financing oil and gas is because we are saying we need to understand first how we model the operations within the banking sector, within the oil and gas sector. For instance, if you want to prepare a meal, you need first to understand how the recipe works, the measurements. When they say 2 tablespoons, what do they mean? That will guide you as to how you prepare the actual product. So the reason why I did not go into the details of the new alternatives and recommendations is because we are at a point where we are saying, let's first understand how we model the operation. Let's first understand how the oil and gas industry work. How would you interpret equity returns in an oil and gas, the cash flows in an oil and gas project? And how does it differ from someone who just bought a truck that they are hiring out? The profit margins, how are the profit margins, and how soon can they expect to achieve their, how short is the payback method, the payback period? So we are saying where we are now is to understand the modeling concept of the oil and gas industry. Once we know how to model their activities and how we model financially their operations, we can then move on to another module that will be on financial innovation, where we are now looking at, okay, what are the new methods of financing that are available to the oil and gas industry? So that's a very important concept, but probably we need to prepare it in a different context. After we are done with understanding the financial modeling implications of an oil and gas project, then we are at par. The borrower and the lender are at par. And from there, we pick it up from there. We decide, okay, what are the new methodologies? One of the new methodologies that I made mention of was in kind of an asset-backed securitization. But for you to be able to do that, you must understand the assets that you are talking about. That's how I would look at it.
Thank you very much, Dr. Watson. I believe, Christian, does that answer your question?
Yes, it does address my question. Maybe the other part is this material which have been presented to us. Is there any way we can get them? Maybe through website or can be sent it to us?
As long as you've given us your contact details, your email in the chat box, you'll definitely get them. And also a recording of this presentation.
Correct. Yeah, that's right.
Yeah, it's my that of the participants in this group, we've had a very healthy participation of close to 20 people. I do hope that we'll get a few of you signing on to the full course. The program for which is on the TIOB website. You can get the course outline there. It'll give you an idea of how long it takes, what the costs are, and what's covered in that program as well.